So if you
Yeah.
can, just really walk us through how does a bridge loan truly work and what are the pros and cons? Because of course we want to know what's the upside, but we also want to understand, what risk is truly involved in this process as well, and just understand from end to end what is a bridge loan and how does it work?
Yeah, I love that question because why did we start calling it a bridge loan? Well, because seller financing, we've been struggling a little bit with language if it's seller financing or is a seller bridge loan. And let's talk about the program on what this means. Seller financing generally has two extreme negative connotations to a seller or to a buyer. And when they think about this, two things come to mind. One, if you're a seller, if you're a buyer making an offer to a seller and you're saying, hey, because you're an investor and you want a lower interest rate, and you're saying, I want you, Mr. Seller, to do seller financing for us. Generally, if you're talking to some of the major gurus in the world, the way that they outlay it, a lot of their programs are a lot harder to sell or convince a seller to move forward with. So we decided that what would it look like if the buyer was first off highly qualified? Because if you're making a seller financing offer to a seller, there's two things that they don't want. One, they don't want to lend to somebody that can't qualify for a loan.
Mm-hmm.
Because why? Because generally that means that the buyer can't qualify for a loan, which means there's probably something behind there that they don't know, which means there's going to be more risk down the line or really headaches down the line.
Mm-hmm.
So one, all of our buyers are all fully pre-approved. So we have them come through, get pre-approved. That does a couple of things for the seller. One, it gives them confidence that this is a qualified buyer. Number two, it also lets them know that they are not responsible for predatory lending because we are going to do the ability to repay calculations and protect that seller from any ability to repay or predatory lending. So there's two pieces behind being pre-approved. Number two, from a seller's perspective, most sellers, not all, but most sellers, when they hear seller financing, they think long-term financing. They have a current 30-year mortgage. They're like, oh my gosh, I don't even want my kids in the house for 18 years. I sure don't want to be attached to somebody I don't know for 10, 12, 15 years, 20 years. So that's where the bridge loan comes in. The programs that we do are short-term financing. Most people are of the camp that interest rates are going to fall somewhere in inside 5 years, inside 3 years. Who knows? None of us have a crystal ball. But if you accomplish those two pieces where a seller, A, understands this person's highly qualified and there's no predatory lending risk to them, and B, they understand that this is relatively short term, meaning 3 years or less, you've gotten over 90% of the negotiations in order to have a deal come together. So we help bring deals together based on terms. We have a highly qualified seller that generally does not have their back against the wall. We will help some sellers if they are in some dire straits type of things. But for the most part, almost all of our clients are sellers that are highly qualified. They're not in foreclosure, those types of situations. Our buyers are also highly qualified because they have to be pre-approved. Now, we can utilize the non-QM or even DSCR qualifications and have that buyer still get a really low interest rate. So when we work with sellers, we help them understand in order to attract a qualified buyer, you're going to have to offer a below market interest rate, which means offering an interest rate maybe at 4.99%. So as an investor, can you cash flow a property at 4.99% or even 5.5%? So those are the types of strategies that we work with, and we work with that seller to kind of help understand that realization. And then B, we help those buyers come in, qualify, or even use some of the larger qualification programs like a debt service coverage loan program or a non-QM program in order to qualify if they need to, other than a traditional program. So when we do that bridge loan, the bridge loan just means that it's a short-term loan, Marco. that works for both parties. And at the end of the term, the loan officers, we're trying to look for opportunities to refinance the home buyer or investor, whoever it may be, the home buyer, and we're looking to refinance them into a longer term mortgage. In the event that the interest rates haven't come down or the investor can't qualify for a mortgage, well, Marco, if you were the seller, you have three options. One, force a refinance or a sale.
Mm-hmm.
Two, do what's called a renew and extend.
Okay.
Maybe if the seller had a 3% interest rate and the home buyer Scott ended up buying the house at 5.5% interest rate, well, you, Marco, are going to make the spread between that 3% and that 5%. Okay. After you sold the home and the house has been deeded to the home buyer, you're getting paid every single month. You got the down payment, 20, 25, 30% down, whatever we arrive on is going to make the most sense for you, the home seller.
Okay.
Then you're going to make monthly income every single month. And that's really where the magic starts coming together. And you get to use that monthly income, Marco, for whatever you want. If you go use that to buy your next investment property, and your next investment property is at 7%, 7.25%. If you're utilizing the $500, $600 a month that you're making on the margin, that difference between the 3 and a 5.5% that Scott bought your home at, well, that makes your effective interest rate usually 2 to 2.5, sometimes 3 points lower. So you can use this program to grow your portfolio. Maybe you have a current property that's just not doing it for you anymore. You'd really like to free up some equity, and you'd like to, but it was maybe your primary residence, or you bought it as a second home, and you have a really far below market interest rate right now. Well, that interest rate is an incredible asset that most agents don't understand, and most investors don't understand how to monetize. The home is not the only asset in the transaction. So is that far below market interest rate. And that's what we bring together and show everybody how to make.
This is it is very, I would say, eye-opening when you start to, sometimes people are overwhelmed by numbers and don't understand that the financial impact or the financial piece when it comes to truly investing. So appreciate you sharing